This is SOUQ QUICKIE, where we take you around the world in 2 minutes. I am Sarah Oswansa, and today we're talking trade, energy, and the global sector. In Nigeria, the story of fuel is changing so fast. This is as spending on fuel imports dropped by over 96% in the first quarter of 2026 alone. Now, that's a very remarkable drop, and a sign that local refining is beginning to replace Nigeria's long-standing dependence on imported fuel. For a country that has spent most of its years importing, that's a very major shift. Still in Nigeria, there seems to be some good news in the trade sector. Now, the country has recorded a trade surplus of 7.55 trillion naira in the first quarter of the year as exports increased and imports fell sharply. Simply put, Nigeria sold far more for the world than it actually bought. That's a positive sign for foreign exchange earnings and economic stability. Now let's move on to the Middle East, where a fragile calm is keeping the oil market on the edge. This is as oil prices edged higher after Iran and Israel suggested that while hostilities have paused, future attacks remain a possibility. The temporary calm followed an appeal from the United States President Donald Trump, and for traders, this message is clear. Peace is holding, well, maybe just for now. And finally, we move to Europe, where a major defense has hit a brick wall. What am I talking about? The leaders of Germany and France have agreed to abandon plans for a next-generation fighter jet program. The project was meant to showcase Europe's defense future, but industrial disagreements have proved too difficult to overcome. And that's it on SOUQ QUICKIE. Thank you for joining us. Remember to follow us across all of our social media platforms at SOUQ Digital. I am Sarah Oswansa.